Good morning and welcome to our weekly update from the news and events for the week beginning the 11th of November. It's Armistice Day today, the 11th of the 11th. Markets are open in the US, but it is Veterans Day in both the US and Canada. That's actually a bank holiday, but commodity futures and stock markets are open, so should be as normal a day as a regular Monday, really. A quick review of what happened last week. Equity is very much in a sort of a more volatile phase. The FTSE ended up unchanged on the week. That's following quite a sharp fall on Thursday after the ECB announcement and a bit of a retracement there in equities. But that was all reversed Friday. The Dow had a big positive day on Friday. Following the very positive non-farm payroll data, ended up 146 up on the week, so that's just under 1% the Dow. But the big news following the ECB surprise rate cut was the fall in the euro, falling 120 odd points versus the dollar, which is just shy of 1%. The British pound very strong on the crosses, nearly up a full cent against the dollar, and also 1.25 cents firmer against the euro as well. So sterling very strong on the crosses there. The yen, that seems to have broken out, falling further against the dollar, so that's encouraging the Japanese Nikkei to firm up as well on the back of that particular move. And gold, as you'd expect following the significant rally in the US dollar last couple of days last week, has fallen quite substantially, falling over $26 on the week. So what have we got coming out this week? Really, it is very much the morning after the night before in terms of data. A very heavy data week last week, culminating with the non-farm payroll data. So a lot less to look at for this week. Quite a few sterling announcements, starting with on Tuesday our inflation data, 2.5%. Compare that with the inflation data out in the Eurozone at the beginning of October. A marked difference, the 0.7% that spurred the ECB last Thursday to cut rates. That is nothing like what we see in the UK. A fall, though, is expected from 2.7% to 2.5% on the back of slightly lower energy costs, certainly oil falling, and in sterling terms falling quite significantly. And we then have our unemployment count on Wednesday, and on Wednesday the data we're looking for another drop of around 30,000 unemployed, while the rate is expected to remain stable at 7.7%. And then in the later on in the morning we have Mark Carney's second quarterly inflation report from the Bank of England. I say Mark Carney, he's the governor of the Bank of England. It's coming from the Bank of England. Quite a lot of debate taking place at the moment as to what's going on in the employment situation, and it could be that the bank may well lower its unemployment forecasts, which would really result in a change in the timescale of this guidance that they've given, which I guess would probably bring them more in line with what the markets have been saying for some time as well. So that data's out at 10:30. That does have the potential to move any sterling crosses on the FX market, and obviously FTSE and our UK gilt market. Then we jump to Thursday. Quite a lot of data coming out on Thursday. The European growth data for Q3, very important. We've started to see a little bit of a recovery in Europe. Certainly Spain has turned the corner a little bit. It's all very patchy though, and I think these the data to be released on Thursday will probably confirm that. The French flash GDP for Q3 just in the plus column at plus 0.1%. Germany faring a little bit better as always at plus 0.3%. And the overall data for the Eurozone is expected to come in at plus 0.2% for the first reading on Q3. We then have retail sales in the UK expected to come in at plus 0.2%. That's 9:30. And then in the afternoon, the first sort of key bits of data out in the US. We've got the trade balance for the US, coming in at 38.7 billion, which is a shade better than the previous month. That comes out at 130. Same time we have the unemployment claims. There is concern that the unemployment claims are a little bit unreliable at the moment, and that's one of the reasons why the markets reacted as they did on Friday, following the significantly better than expected non-farm payroll data and the revision for the 2 previous months, which has led a lot of commentators, or a few commentators I should say, to question the data, its reliability, and perhaps suggesting that there will be further revisions in December on this particular data. And then an important event, we have the Janet Yellen, the chairperson designate for the Federal Reserve, when Ben Bernanke resigns or leaves his post in January next year, and we're very interested to hear what she's got to say. She is what's called as a dove, so she will persist with the policies of Ben Bernanke, and there is a feeling perhaps that tapering probably still will not take place until next year, but we'll await further news on that with data, and obviously in what Janet Yellen says in her testimony on Thursday at 3 o'clock. We then have Friday, not a lot of data. We've got the Empire State Manufacturing Index, that'll be quite interesting, and some lesser impacting capacity utilization industrial production data. That's it for the week. Equities in that volatile phase. Are they running out of steam? Are they going to be propelled higher? Seasonally, it's tough to bet against equities, so I think it's going to be quite markets will remain quite polarized on that front. Obviously the US dollar seems to have stolen quite a march, and precious metals following the dollar, i.e. falling quite sharply as the dollar rallies. Thank you very much for listening. We will reconvene again on Thursday at 8 o'clock for an update on the week's trades. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.